Hello, good morning, everybody. And how are you doing this morning? If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section and let's confirm that we are all on the same page before we get the session started. So I will be running through the chats to see. Oh, great. Thank you, Carrie. Good morning. Ashitaka, good morning. How are you doing today? Trust you're doing well. Okay. Okay. So I want to welcome you all to yet another promising session of Extreme Speed Live, hosted by my humble self, Sheriff Daramola. And as usual, in the next 1 hour, I will be taking you on a trading journey where we will be evaluating the financial market, studying the chart, studying price movement, and using technical parameters to identify trading opportunities that's probably going to be lining up for us during the New York session today. And before I go further, it's important I state here that we definitely will have to look at the previous pairs we looked at yesterday. I think we did about 7 pairs yesterday, and we are going to be taking a look at each of those pairs and let's see how well the pairs have been doing so far. And if there are any updates, commentaries, I will be sharing with you during the course of the session. If you have any pair or commodity you want us to look at, feel free to drop it in the comment section and I will try as much as possible to inculcate it into our plans for today. So with no further ado, let's dive into the charts and let's see what is happening at this point in time. Okay, I think people are coming up. I can see Halai Soares. I hope I pronounced that correctly. Good morning to you. Mesutel. Hi, good morning. 3275. Hello, how are you? 39380. Good morning. How are you doing? All right. Of course, we are going to be treating silver. I think we already have a breakdown of that structure we identified yesterday. So we are going to be looking at it, of course. So please stay tuned in so that you won't miss out on our expectations for today. So let's dive into the chart and let's see what's happening. So the first pair we are going to be looking at today is the US oil as usual. And let's see what we have here. Well, if we look at the current structure we have here on the 1 hour time frame, we can see how price broke down that structure yesterday, and I told you how we could be taking advantage of that bearish momentum if we finally see a retest of structure. And lo and behold, what exactly happened? Remember, we were around this point yesterday when we were talking about this pair, and I said we should be waiting for price to give us a confirmation in the form of a retest of structure. So what we saw in the last 24 hours, we saw the breakdown of the structure here, and then price came back to do a retest of the structure, that is the bullish trend line, after which we saw multiple rejection. Let me show you. So we saw multiple rejection of this bearish trend line at this point, giving us further confirmation that the bearish momentum is valid. In fact, we had how many rejections? We had one, two, three rejections at this point. So if you had missed the first one, there is the second opportunity, and if you had missed the second opportunity, there is the third one to join the decline. So right now, price moved as expected, and it moved like this. We saw the move, we saw the breakdown, we saw price come back to do a retest of that bullish trend line, and price went all the way to the $85 area before we started seeing the move to the upside again. And remember what I shared with you here on the US oil. I told you that as soon as price gets into the $85 area, that is the key level, the important key level we identified on the daily time frame. We want to be locking up profit or moving our stop loss to break even so that we don't get caught up in any sudden pull up. And the reason why I said this obviously is because of the strength of this level, as how we can see how price has respected that level in the past. We can see how buyers have gathered within this point to push price to the upside in the past. So we don't want to be caught up in a scenario where price come back into this level with a reversal pattern that push price up. So I told you to move your stop loss to break even at this point. So right now, if you had done that, you will still be in profit anyway, and price is right back within our entry zone. So now, what I want to be doing first of all, before we go into how we intend to take advantage of this move, that is for those who had missed this opportunity for the New York session today, I think it's most appropriate that we scale up to the higher time frame so that we can actually see how we got to this point, especially for those who missed out on the session yesterday. So if we go up into the daily time frame here, the first thing we observed is that price action has been on a very strong bullish momentum since the beginning of the year, and we were able to identify this bullish trend line after connecting the series of higher lows to give us our resultant bullish trend line. And the other thing we did here is to identify the key level at the $85 mark, which we can see how price has consistently respected this area. We can see what happened in October/November last year. We saw our price rejected this $85 level. Then we witnessed a breakout retest of structure during the early month of this year, as is on I think in January, and then price went to as far as the $129.50 area before we saw a consolidation phase that pushed price down back into the key level we identified at the $85 mark. And obviously, what has been happening around this area in the last let me see, 6 weeks thereabouts, we can see how that level has been holding price action. We can see how participants has been rejecting this level around this area, giving us a clue into the strength of the buyers at this point. And also, this area also shares a confluence with the bullish trend line we identified earlier, giving us a clue into the strength of the buyers at this point. So, and at the same time, we should understand that this bullish trend line and the key level area around this point is a very, very sensitive area, as we really need to be very careful not to jump into any trade at this point, as we could have a scenario where price respects that bullish trend line and push to the upside. That is one scenario. Hold on a second. We could have the move to the upside from here, or we could have an outright breakdown of the $85 level, after which a retest structure gives us further confirmation to join the decline to the downside. So now, with the view we have here on the daily time frame, the next thing we want to be doing is to scale down to the 4 hours time frame, where we want to see what has been happening in the last couple of months. Now, when we scale down to the 4 hours time frame, the first thing we observe here is to connect the series of lower highs, after which we were able to identify this bearish trend line. And you can see after connecting this lower highs here, we have this resultant bearish trend line that price has been respecting in the last couple of months. But something interesting happened during the later part of August, where we saw the breakout of that structure, giving us a clue into the strength of the buyers and also telling us how that bearish trend line is no longer strong enough to hold price action. So now, with this information we have here on the 4 hours time frame, let's zoom into the structure we have since in the last couple of weeks. Then we saw the breakout of this bearish trend line here. Price broke out the bearish trend line, and from a technical standpoint, we expect that price should do a retest of that bearish trend line to give us further confirmation that we want to be going bullish. However, what happened in since the beginning of the month of September, we saw the breakdown of that bullish trend line. That is it. Remember, we had that bullish trend line here with the intention of testing the $85 mark, and we had a consolidation phase right within the $90 level. and we saw how price continued to climb that bullish trend line we identified here, after which we saw the signal on Tuesday, I guess. On Tuesday, we saw this breakdown of this trend line to give us a signal that is likely we might be having a trend continuation to the downside. So I told you we should enter at the retest of structure, which has happened. We saw the retest of structure and we joined the decline to this area. So some people would have actually taken their profit at the $85 level. That is around 250 pips there because of the significant nature of that $85 mark. But if you are on a long-term trader, definitely you would have moved your stop loss to break even, hoping that price will still continue to break down that level. And if price does not break down and we see price continue to the upside from here, then we have to pass the trade. That is, if price continues and takes us out of our break-even position, then it's okay. We don't need to beat ourselves over this, because there are quite a lot of opportunities in the market that we can always take advantage of. Now, even if price takes us out of our position at this point, that is, price goes back into, let's say, somewhere around the $89 level, we should understand that we are still within the structure of looking for selling opportunities. Remember, we have this bullish trend line. We have this bullish trend line which shows that price is still below that level. And also we have this $89 level, which has been the significant zone we've been looking at since the beginning of the week. And there is a possibility that price could still come back to do a retest of either the bullish trend line or the bullish trend line or the level at the $89 mark, after which we look out for patterns in lower time frame. It could be your double top structure, your head and shoulder pattern, or whatever pattern it is that supports a trend continuation to the downside to join the decline to the downside. So for those who missed this opportunity yesterday, that is the retest at this point, there is still a likelihood that we still have selling opportunities coming up during the New York session today. So what we want to be doing here, especially for those who missed out on this opportunity, is to be patient enough to wait. Let's see how price is going to relate with the $89 level, which also shares a confluence with the bullish trend line we identified earlier yesterday. So this is what we are going to be looking forward to for today, and let's scale down to the 1 hour time frame to have a better perspective of what is going on. Now on the 1 hour time frame, we still have the same structure. Remember, this is where price started this week. Price started around this area. Price went to as far as the hold on a second. Price went to as far as the $90.40 area before we started seeing this move to the downside. So what I want to be suggesting here is that we should wait for price to come back into somewhere around here. It could be around the $89 level. It could be around the retest of this bullish trend line, or it could go as far as the $89.50 area. What we want to be looking forward to is a reversal pattern or a structure. So we can see, look out for, let's say, double top, something like this, a head and shoulder pattern, a falling wedge, then we could join the decline to the downside. So if price comes back into the $89 level, that means our entry point will be readjusted. Hold on. Will be readjusted from where it was here into somewhere right above this point, after which our stop loss will be right above the previous structure. So this is tentative anyway. This is not cast in stone yet. So let's see how price plays out during the New York session today. If price comes back into that area, we should be looking for that opportunity to take advantage of a trend continuation to the upside, to the downside rather. And on the contrary, I was just looking at this. Let's bring out our line charts. I was looking at this level here. We saw the previous retest here, that is around the $88 mark, and I'm seeing something here like this that we could also take into consideration while the New York session begins. So we have somewhere around here, and the reason why I've identified this level is obvious. we can see how this level has also been a major determinant of price action. In the past, we can see it was a demand zone before the breakdown of that structure happened. Then price broke again back up into that structure. Then it was broken here again. Then we saw multiple rejection at this level, that is the $88 level, where participants sold this market. Now, right now, we have seen something like a sharp rejection of that area. So what I'm saying here is this: if price does not go to as far as the $89 level, or probably the bullish trend line, to retest it to push price to the downside, then we want to see how price is going to relate with this level at the $88 mark. If we see multiple rejection of that level, then we could get ourselves prepared for any selling opportunity. So what we look for is this: if price does not go this far and price comes back into this area with multiple rejections or a reversal pattern or any structure that supports trend continuation on your lower time frame, you could join the decline to the downside with a take profit target sitting right between the $84 mark area and the $83 area. And the reason why we've identified the take profit target around this area is simply because of this bearish trend line we identified on the 4 hours time frame. Hope you remember that. We remember the bearish trend line that was broken to the upside here, and then price came back to retest it. It's likely that price will come back to retest it one more time before we see the move to the upside. So let's see how price action plays out during the New York session today. I hope you are well equipped with the information we just had here to be able to take advantage of that opportunity when it finally happens. Now, the other scenario we want to be looking at, considering the long-term bullish momentum on the US oil, is if we have an outright breakout of the $89 level, that is, price breaks out of the structure to the upside, coming right at the top of the bullish trend line we identified on the higher time frame, then this is going to be a signal of a bullish momentum. But remember, we don't want to get too excited at the sight of such a signal, as we want to wait for confirmation to give us a leverage and a comfort that we could join a rally. And the only way we can get that confirmation is if price comes back to respect that bullish trend line we identified on the daily time frame, or probably respect this bullish trend line here, which also shares a confluence with the $89 level, after which we look out for patterns in lower time frame that supports a trend continuation to the upside. So what I'm simply saying here is this: we are not going to be buying the US oil unless we see a break above of the $89 on the bullish trend line we identified on the daily time frame before we can be thinking of taking advantage of a bullish momentum. So this is the scenario we are having here on the US oil. If you have any question regarding what we just discussed so far, feel free to drop a word or two in the comment section, and I am ready and willing to be of assistance in this regard. So I'll be taking the next 10 to 15 seconds to read through the chat and see if there are any questions regarding what I've just discussed so far before we move on to the next pair. Okay. Chai Jin saying that does UK oil still to rise? Well, we are not treating UK oil, but if you want to, we'll try to incorporate it into our session for today. But I think the UK oil and the US oil are corresponding pairs. I think they move hand in hand. So if there's still time, we could look at the UK oil. All right, Chai Jin. Pipe 80, good morning. How are you? Trust you're doing well. Bani 27, good morning. Mania, good morning. Bani 27, okay. All right. Hey, Streamroller, how are you doing today? Glad to have you around. It's been a while since I saw you on this platform. Hope you're doing well. Is AUD USD likely to go up? Well, AUD has been a very strong downtrend, and I have not seen that chart this morning, but let's see if we can look at it before the session ends today. So let's see if we can look at it before the session ends today. So I'll pen that down. Good evening from Philippines. Okay, Mirzamar. Good morning. How are you? Good morning. One Bicep. How are you doing? Good morning, One Bicep. I hope I pronounced your name appropriately. I'm sorry if I don't. All right. Good morning. How are you doing? Streamroller. All right. Okay. So let's move on to the next pair and let's see what is happening on the US tech. The US tech is the next pair we are going to be looking at, and we were able to take a bearish momentum on the US tech yesterday. And during the course of the live session yesterday, price was at around where was that? Price was at around somewhere around here, I guess. Somewhere around here. Remember, we took this move to the upside. We took the breakout of this channel. Remember, at the beginning of the week, we identified this channel right between the $12,150 area and the $12,050 area. Remember? So we saw this consolidation phase since the beginning of the week, and then we said, okay, fine, since we have a channel running, what we want to be looking forward to is a breakout of the structure to give us a signal of where price could be heading at this week. Then we saw this move to the upside. We saw the breakout of the structure. Then price came back into the $12,150 area where we took advantage of the bullish momentum. And remember, we told you that as soon as price moves to the upside, we move our stop loss to break even. And the way things went, price came back, take us out of our break-even position, and price continued to roll down into somewhere around the $11,900 level. Now, during the course of yesterday, we were around this point and we said, okay, fine, if we have price break down that structure, then we want to be looking forward to a retest of structure on a lower time frame to join the decline. So we saw this move. We saw our price broke down the $12,000 mark, which was a very, very significant level that we identified on the daily time frame. I will be sharing with you how we got to that point later on, but I just want to give you a relay of what happened yesterday. So we have price break down the $12,000 area. Price came back to retest the structure, giving us further confirmation. We had 1, 2, 3 rejection of that level, and then we joined the decline to the downside here. So at this point in time, we're actually in profit on the US tech, and the first thing I will be saying here is to move your stop loss to break even so that we protect our position against any sudden pullback that could happen. We never can tell. So now what we want to do now is to scale up to the daily time frame, where we want to have an holistic look at what is happening and how we got to this point. And to be fair enough for those who missed the session yesterday. So when we scale up to the higher time frame, that is the daily time frame here, the first thing we observe is that price has been on a downtrend scenario since the beginning of the year, and this is evident after drawing the bearish trend line. We connected a series of lower highs here to identify this move, and then we saw another rejection of this area during I think somewhere in the month of August. I think the early days of August, we saw a rejection of that area. And remember, we took about 1,400 pips on this one. We took the move right from, hold on a second, right from the 13,500 level. I think we took it right from this point, 13,500. Yes, we took it right from this point 2 weeks ago, and we took the ride right down into the structure, which gave us over 1,400 pips. Now, with the current structure we have here since the month of June, we can see price has been caught within an ascending channel. We saw our price continue to find higher highs and higher lows within this channel. We saw this move, price continued, then we saw something that looks like a breakout of that channel, and we later saw that this was a false one as price came back within the channel to push price to the downside. So now we had the breakdown of this channel during the later part of last week trading session, which led price to the $12,000 mark, which is the neckline of the reversal pattern we identified here. I will show you that. So let's do this. Okay. So in the month of June, we saw the structure here. We saw this impulsive move to the downside. We saw something that looks like a reversal pattern here with like a double bottom structure. We saw the breakout of that neckline at the $12,000 mark, which is also a very, very strong psychological level. We saw the breakout, retest of the neckline, and price climb to the upside from here. And what are we seeing here? Price appears to have come back into the neckline again with multiple rejection at this level. So right now we are on a very, very critical point. We are on a very, very significant level, and it takes patience and consciousness to be able to trade at this point. So right now, price is right on the $12,000 mark, which, like I said, is a very strong psychological level. And one thing we could be expecting from this point is price could respect that neckline in such a way that price climbs to the upside from here, or we could be having an outright breakdown of that neckline to give us a bearish signal where we want to be looking for a retest of structure. It could be a retest of the zone or a retest of this area to join the decline to the downside. So with the information we have here on the daily time frame, we were able to scale down to a much lower time frame to look at what has been happening. And when we scale down to the lower time frame, what did we see here? We can see we've been having multiple rejection of the $12,000 area, and we said, okay, if we continue to see a rejection of this area during the week, we saw the first touch, second touch around this area, and we were actually thinking that this is going to evolve into a double bottom structure, something like this. The first touch, second touch, then we have a breakout of the neckline at 12,400 area to give us a signal of a bullish momentum to the upside, but that did not happen. And what did we see? We saw a breakdown of the $12,000 area during the course of yesterday's trading session. So now when we scale down to the 1 hour time frame to look at how participants have actually been relating with this key level area since the beginning of the week, this is what we have here. So we saw this consolidation phase happen. Price came right down into this area. We saw a consolidation phase giving us a clue into the indecision in the market where we think that participants are actually waiting for a catalyst to run price in a particular direction. Then we saw the breakout of structure. We took advantage of this move. Price went up, and then we moved our stop loss to break even, and price came back to take us out of this position, only to run through the $12,000 area. And then we saw a retest of the structure, which gave us a confirmation to join the decline. So that's how we got to the point we are right now. So now going into the New York session today, how do we intend to take advantage of this trade? Especially for those who have missed out on this opportunity. Now, what we want to be looking forward to here is this: after noticing that we have a breakdown of the strong psychological level at the $12,000 area. So we saw the breakdown of that level, giving us a clue into the strength of the sellers at this point. So what do we want to be doing here? So what I will be doing here right now is this. The first thing I will do is we should identify this impulsive move to the downside. From here, we had a move from $12,240 area. Price moved to as low as the 12,920. Is it $11,910? That's the impulse leg, and we've been seeing a retracement move to the upside. So if you had missed this move, then what I will be suggesting is that let's wait for price action to come into our golden zone area, where we want to be looking for selling opportunities. And what do I mean by the golden zone area? Very simple. The golden zone area is an area between the 50% and the 78.6% of the previous impulse leg. So if we bring out our Fibonacci retracement tool and run it through the previous impulse leg, what do we have? So we have somewhere around the 50 and the 78.6% as an area we want to be looking forward to selling opportunities. So let's highlight that out for the sake of clarity, and let's give it a label so that we have a visual understanding of what our expectation is going to be during the New York session. And then we have our sell window right here. Let's give this a green color, and then I'll prefer my sell my execution area to be yellow in color, so we have something like this. So now going into the New York session, and for those who have missed out from this move, we have another possible entry at around the sell window, which is located right between the $12,070 area and the 12,170 zone. So what we are going to be looking forward to is this. We saw this impulsive move to the downside. We want to wait and see how price is going to relate with this level. Is price going to come into the $12,150 area, where we want to be looking out for reversal patterns or structures that supports a trend continuation to join the decline to the downside. That is the first scenario for selling opportunities that we want to be looking forward to. Then the other scenario we want to look at is this. Should price decide not to come into the sell window here, are we going to pass the trade? Are we going to leave this trade? If price does not come into the sell window, that is a very good question we need to ask ourselves. Now, what we do here is this. This is the support level of the channel that price action was within this when price started this week. Remember, we saw this consolidation phase during the first few hours of the week, and we can see that price was respecting this level at the $12,050 area multiple times. We saw the breakdown of that $12,050 area during the course of yesterday's trading session, and right now we are within this level here. So it's a very, very significant area we need to look at. Now that price is within the zone, are we seeing a reversal pattern here? Can we cite a reversal pattern here on lower time frame to actually set a sell stop right below the $12,000 to join this decline? So to get a better understanding of what is happening here, we want to scale down to the 50 minutes time frame. Let's choose the 50 minutes time frame for now, and let's see what's happening on the 50 minutes time frame. And if we don't get a structure, we can scale further down into a much lower time frame. So on the 15 minutes time frame, this is what we have here. Let me adjust this so that we can see what we're doing. So we have something like this on the 15 minutes time frame. We saw the first touch of that level of the $12,050 area. Price came into this area, and since then we have been seeing multiple rejection in the last 3-4 hours. Now we've been seeing multiple rejection of this area, giving us a clue into the strength of the sellers at this point. So are we going to be having a breakdown of the structure where a retest will give us further confirmation to join the decline? That is a big question we ask ourselves, and we can only get an answer when we see a breakdown of that structure. So what we want to do here is I want to see this area as a reversal pattern on the 50 minutes time frame. And when we have a reversal pattern like this, what we need to do is to identify a neckline, and let's have our neckline right around this area. That is, where is that? Around the $12,036. Okay, so let's label this area 12,036. Okay, and let's place it right at the bottom center of this, so we have something like this. So if at any point in time we see a breakdown retest of this level, then we want to be selling the US tech. This scenario is as a result of the fact that if we don't see price come back into the sell window here, then we can be looking forward to a breakdown of that $12,036 area, a retest of the structure to join the decline. So this is the scenario I'm looking forward to on the US tech for now. I'm not thinking of any bullish potential opportunity here yet, because before we can be buying this, we need a significant engulfing candle that will take us right out of this channel here. That is the channel between the 12,150 and the $12,050 area before I can be thinking of buying the US tech. So if you have any question regarding what I've just discussed so far, feel free to drop a word, drop your inquiry in the comment section, and I will be willing to be of help. So I will be taking the next 10 to 15 seconds to run through the chat and see if there are any questions regarding what we just discussed so far. And if there isn't, then we move on to the next pair. Okay. All right. One bicep. Okay. I got it right. Yay to me. Glad. Okay. Is USD going to be bullish? Well, that's a question we need to look at. So when we start looking at the major pairs, I will attend to that. Okay. So stay tuned in so that you don't miss out on that. So 492 is asking about AUD USD. All right. I already penned that down. Let's see how we can incorporate that into our plans for today. Then Jankra Senses. Okay. How are you? Good morning. Nina, you're welcome. Right. 492 is asking for USD JPY. Yes, USD JPY is the next pair we are going to be looking at. We deliberated on it yesterday, and we're definitely going to take a review of that pair. So stay tuned in and so that you don't miss out on that. Okay, 6081. All right, you're welcome on board. Glad to have you around. So, okay. All right, so let's move on to the next pair and let's see what is happening. So the next pair we are going to be looking at is the USD JPY, and let's see what we have here. USD JPY has been going very strongly to the upside, and I want to ask if you were able to take advantage of this trend continuation to the upside, since we never saw this move to the bullish trend at any point in time yesterday. So we're expecting price to come back into the $140.800 area. And since yesterday, we've not seen any intention of price coming down into that area. And remember, I told you how I missed this move to this point yesterday. I missed the breakout of the 140.800 area. I was asleep. And when I woke up in the morning, price had moved significantly well in our direction, but I missed out on it. However, I shared a scenario with you yesterday where I said we could be looking out for patterns. Remember, I told you if we have moves like this and we see consolidation phase right within that area, then a breakout of that structure should give us a confirmation to join the rally. Remember, I said that yesterday. And when I scaled down to the 15 minutes time frame, I saw a couple of setups like that to take advantage of. And the first thing I did here, I saw one here, I missed this one, and I took advantage of this one right from this point. So presently I'm in profit with about let's see, 200 pips in profit right now. And the reason why I took this move, let me show you on the 5 minutes time frame. This is what I saw here on the 5 minutes time frame. And considering that we are on a very strong bullish momentum, was the reason why I took this move. We saw this move here. Price came into this point, and hold on a second, we had this impulsive move. We saw this consolidation phase here. Price was caught within this area, then another sharp rejection of this area, so we took this move to the upside. Then another consolidation phase happened here, multiple rejection of the 142.580 level, and we took this move again to this upside. And I actually missed this one to the upside, and price has continued significantly well into our take profit target area. Remember, we had a take profit target around the 143 and the $145 area. So if you are taking your profit on this one, it's okay, you are fine. I'm still running. I moved my stop loss to protect my position, and we still have a trade running at this point in time. So now that we have the scenario here, how do we intend to plan our trade for the New York session? Well, the first thing I will be doing here is to hold on a second. Let's see what's happening on the higher time frame, on the daily time frame. And if we look at the daily time frame here, let's zoom into the current structure. This is what we have here. The USD JPY has been very strong on a bullish level, and we have since the beginning of the week, we've had about how many pips? About 450 pips. That's whooping. 450 pip move since the beginning of the week. So what we want to be doing now, if you had missed this move, I will just suggest that you remain patient to wait for the kind of setup I just showed you on the lower time frame. Look out for consolidation phase, which is very, very peculiar with the USD JPY. So what I'm simply saying here is this: on your lower time frame, you see an impulsive move like this. We'll wait for consolidation phases like this. Then you could join the rally at after identifying a demand zone for this consolidation phase. So this is what I'm talking about here. So if you have this, like something like this, you could take advantage of the move right below this level. However, if you're a long-term trader, I would just suggest that you hold on and let's see if we are going to be seeing a retracement move on the USD JPY before the week runs out. We don't know how price is going to play out. Remember, we have this bullish trend line running since last week. So we want to see if this bullish trend line can still be respected one more time. That is, we see price come back into that bullish trend line somewhere around here, and then we look out for patterns to join the rally to the upside. So if that does not happen, then we just pass the trade at this point. So we are within our take profit target zone. So move your stop loss to lock in some profits, and then let's see how price goes. If you're still in this trade, you can still extend your TP to somewhere around the 146 Japanese yen area. Let's see if we have a structure to play around with around that area. Let's scale up to the weekly time frame. Let's see if we have a structure. Okay, so we have a structure right around the 147. If we look left, we can see we have somewhere around here. We can see that area has been a major determinant of price action in the past. So between the 145 and the 147 area, 147.5 area seems most appropriate to extend your TP target if you are still in the trade on the USD JPY. So the USD JPY has been the USD has been very bullish against the JPY since the beginning of the week. So let's see what happens going forward. I think that's that. If you have any questions on the USD JPY, let me see in the comment section, and if there's any way I can be of help, let me know. So moving on, we went on to talk about the JPP card yesterday. We were actually in a profitable situation on the JPP card yesterday before we saw price climb back down, broke down that bullish trend line to take us out of our position. Like I said yesterday, we enjoyed this rally. This is what we observed during the beginning of the week. We saw this move. We saw the first touch of the 1.50500 level. Price came back into the 1.5100 level. Then we saw the second sharp rejection of the 1.50500 level. Then a breakout of that neckline at 1.5100 to give us a signal of a bullish momentum. And then the citation of this retester structure gave us a confirmation to join the rally to the upside. And price moved about, I think, 140 pips. Let me see. Let me recheck that. Okay, around 120 pips before we started seeing that decline. So what happened yesterday was we identified this parameter, this bullish trend line, as our guide. We want to see price respecting that bullish trend line to join the rally, but that did not happen. We saw a final breakdown of that bullish trend line, and personally I got stopped out right below that bullish trend line because I moved my stop loss to somewhere around 50 pips, and in fact it was very painful after going as far as over 100, and then price went back. So such is the market. And yesterday I was telling you, okay, fine, for those who had missed the trade, we could be looking forward to an opportunity to join the rally if we see multiple rejection of the 1.517500 level, but that did not happen as price continued to find lower lows and lower heights. And what did we see here? We can see our price broke down to 1.51750, and then we saw multiple rejection of that level to push price to the downside. I actually missed this move anyway. I missed this move and couldn't take advantage of it. But if you had, kudos to you for taking advantage of that move, and price has continued to the downside from there. So I think that the momentum has shifted to a bearish perspective. So what I want it to be doing here is to delete this bullish trend line as it is no longer relevant. Delete this, and then let's see how we could take advantage of a trading opportunity this week. Now, if we look at it from a long-term perspective, it is obvious that price action has been on a very strong bearish turn on the daily time frame. And now that we have a breakdown retest of the 1.51750 level, remember I showed you that here. We saw the breakdown of the 1.51750 retest, another retest of this level. So what I want to be doing here is, if there is a possibility that price comes back one more time to retest the 1.51350 level, then I will be taking advantage of a bearish momentum from that point. So let me extend this out a little bit so that we can have so we have it at okay, 1.51400 area. So that is 1.51400. So that is what we are looking forward to now going into the New York session today. So if you had missed this move, that is the retest of the 1.51750, price has moved about 80, close to 90 pips right now. If you are taking advantage of that move, kudos to you. But if you have not, and we want to join this decline, then we don't have any other choice than to wait for another opportunity, and we don't know if price is going to give us that opportunity. But if the opportunity comes, what we are looking forward to is price coming back into the 1.51400 level, where we want to look out for structures on lower time frame to join the decline to the downside on the GBP card. So that's the scenario we have on the GBP card. So let's see how price plays out. And then the next pair we deliberated on yesterday is USD CHF, and the USD CHF has been very choppy in the last 24 hours. And let's see what we were looking at yesterday. Let me scale up to the higher time frame so that we can see how we got to this point. And if we scale up to, let's say, the daily time frame, for instance, the first thing we observe here on the daily time frame is price action has been on a very strong bullish momentum. After drawing that bullish trend line, we saw our price has consistently respected that bullish trend line. And the next thing we observe here on the daily time frame is the key level at the 0.95700 area, which aligns with this bearish trend line that was broken during the later part of month of August. We saw the breakout retest of that bullish trend line, of that bearish trend line, and then price continued to find higher highs. Hold on a second. We saw higher highs and higher lows at this point. But something caught my attention here that gave me a clue that there could be a possible bearish momentum happening this week, and that is the supply zone identified here at around the 0.98600 level. If we look into the past and see what happened in the month of July, we saw how this level has been respected by the sellers. We saw multiple rejection of that level in the month of July, and right now price is right back at that zone. And because price is right back at that zone, and if we see what happened in the later part of last week's trading session, we saw how we saw sharp rejection of the supply zone here. This is evident with the week rejection here. We saw the first one here, the second one here, and the third one on Monday. And in fact, we had this engulfing candle yesterday, but we can still see selling pressures right around the sell supply zone. And this is giving me a clue into the strength of the sellers. As we can see, there is a tussle between the sellers and the buyers at this juncture in this market. So now the question is, who is going to win this tussle? Now, when we scale down to the 1 hour time frame now, things become a little bit clearer. Now, on the 1 hour time frame, the first thing I was able to observe on the 1 hour time frame is this bullish trend line that has been guiding price action since the beginning of last week's trading session, and we can see how price has consistently respected that bullish trend line one way or the other. We can see this move. Price consistently respected this bullish trend line, and we can see as soon as price got into the 0.98600 area, we saw sharp rejection. Price found lower highs, and then we saw a final breakdown of that bullish trend line, giving us a signal of a bearish momentum. And from a technical standpoint, when we cite such breakdown or breakout of structure, what do we look out for? We look out for a retest to give us further confirmation, and the retest appears to have come in form of a retest of that bullish trend line. In fact, we saw multiple rejection of that bullish trend line around here between last night and this morning. We've seen multiple rejection of that bullish trend line around this point, giving me a clue into the strength of the sellers at this point. So now, like I said yesterday, for us to be selling the USD CHF, we must be seeing price right below that bullish trend line for us to be comfortable in a selling position on the USD CHF. And the only time I want to be buying the USD CHF is only if I see price breaks out of that bullish trend line, even break out of the supply zone, taking out all the selling position at this point, then I want to see that as a signal of a bullish momentum. Now, we don't want to get too excited. Remember, we want to wait for confirmations to happen in the form of a retest of that bullish trend line, or probably a retest of the 0.98350 level, where we want to be looking out for patterns that supports a trend continuation to the upside to join that rally. However, during the early hours of this morning, we saw this sharp rejection leading into this engulfing candle that took price right below the 0.98350 level. So what I concluded at is this: if I am going to be selling the USD CHF after this impulsive move to the downside, breaking down the 0.98350 level, I want to be joining the decline right below the 0.98350 level. So if price continues right below this level, so I think right below this level is a good area to place your stop, your sell stop, to join the decline to the downside. If price continues to the downside below the 0.98350, I want to be joining the decline to the downside on this one. However, if price continues to remain right above the 0.98350 level, which probably extends right above the bullish trend line, then we could be looking forward to buying opportunities on the USD CHF. So this is my scenario on the USD CHF, and this is how I plan to trade the USD CHF during the New York session today. If you have questions, please don't forget to drop it in the comment section. I'm trying as much as possible to look at the comment section to see if there are questions whatsoever. And I have 5 minutes left, so let's quickly look at silver, which is the commodity that Ashitaka introduced us to yesterday, and let's see how price is. Though we already have a signal on the silver at the moment, and let's see what is happening right now. So now we are right on the silver. Is Ashitaka in the house? So we can look at this together. And now on the gold, I think we should, let's scale up to the higher time frame. Let's see how we got to this point. Now on the higher time frame, the gold has been on a very strong bearish momentum since the beginning of the year, and we were able to identify, first of all, we were able to identify this bearish trend line. The tick one you can see on your screen here, we can see how price respected that bearish trend line. That's the first thing we did yesterday. We identified this one. Even though we saw a breakout, we saw the breakdown, price came back down the bearish trend line, and we've been seeing lower lows and lower highs since that point. Now the other parameter we have here is the descending channel. We can see how price action has been respecting that descending channel since February this year. Price came below it, and we can see this move, and price is right back within this area. And remember what I told you here yesterday. I said there is a possibility that price could come back to respect this, retest this resistant level of the descending channel, where we look out for patterns to join the trend continuation to the downside, or we could have a continuation from, hold on a second, continuation from this point to the downside. That is, if price does not come back up, then if price reject the $18.50 level, then we could be looking forward to a trend continuation to the downside. So now let's scale down to the 4 hours time frame and let's see what the structure is saying there. So on the 4 hours time frame, what do we have? The first thing we were able to do here on the 4 hours time frame was to identify that key level at the $18.50 area, and we can see how that level has been a major determinant of price action. In the past, we saw multiple rejection of this area by the buyers, and we saw how price broke down that structure here, did a retest of this level. We had a retest of this level here too, giving us a clue into the strength of the sellers at this juncture in this market. And we said, okay, fine, if we are going to have a rejection of that level one more time, which also shares a confluence with the breakdown of this bullish trend line, we will be joining the decline to the downside yesterday. And so lo and behold, that is what happened. If we scale down to, let's say, the 5 minutes time frame, we saw the breakdown retest of that bearish trend line. And I don't know if Ashitaka took advantage of that move. Look at here on the 15 minutes time frame. This is what we have. We saw the breakdown. We saw the breakdown of that bullish trend line. We saw multiple rejection of this level. Remember, we identified this level and then we took the move to the downside. So Ashitaka, did you take that move? And if you are taking that move, you would have been in about, you will have taken about a maximum of, let's see how many pips that is, close to 400 pips on this one before we saw the rally back to the upside. So if you had missed that move anyway, I think we still have another opportunity to take advantage of a trend continuation to the downside. That is, if price does not break above the 18.30 cents area. So right now we have seen this move to the downside. We took advantage of the breakdown of the structure right into the $17.850 area, which is an impulsive move to the downside. Now the next thing we want to be looking forward to is how we could join the decline to the downside. So what we see here in the last let's see, in the last 12 to 15 hours is something that looks like a retracement phase. So now we want to, how do we know if this retracement phase has ended? Well, the first thing I want to be doing here is to identify our golden zone area, which is right between the 50% and the 78.6% of the previous impulse leg. So what I want to be doing here is to bring out my Fibonacci retracement tool, run it through the previous impulse leg here, and what we want to be doing is to identify the area between the 50 and the 78.6% as an area we want to be looking forward to selling opportunities. So right now we have the sell window here. Let's place it right inside the box. Give it a green color, make it 14, and then make our box a yellow. So that's our execution zone. So what I'm looking forward to right now is this. Looking up for selling opportunities right within the sell window. So anywhere right within the sell window seems most appropriate to be selling the silver. So I want to see price come back into this area, give me a reversal pattern. Then I want to be joining the decline to the downside. So that's how we want to trade this. So we actually have a couple of scenarios that is likely going to be happening here. Well, the first one is what I just showed to you, and we could be having price come to as far as the retesting that bullish trend line that is somewhere around the $18.50 level. Remember, we had a key level around this area, and we could be seeing price continue to the downside. So depending on your portfolio size, it's most appropriate that we have our sell stop right above that $18.50 area, somewhere around above the previous high here. So depending on your position, on your portfolio size, you could manipulate your entry point in such a way, or your lot size in such a way that it fits into your risk to reward ratio around this area. So we have our sell window around this area, sell stop right somewhere around here to be able to take advantage of the selling momentum here. Now, another thing I also want to show you here is this key level at the $18.30 level. So let's label this area. We have $18.30. Let me place it on the left hand side so that okay. So we have this key level at $18.30. And remember how this level has been respected in the past. You can see we saw the first touch here, we saw the second touch, Then we saw the breakout of that structure here. Then we saw multiple rejection. Then we saw a breakdown of that level during the course of last week trading, sorry, during the course of yesterday's trading session. And price appears to be right at that area one more time, and I think we've been seeing sharp rejection, and also this sharp rejection falls within the sell window we just identified, giving us a confluence to play around with for the against the New York session today. So what do we want to do now is to scale down into the lower time frame, let's say the 15 minutes time frame, to actually see what is happening within this area. So when we scale down to the 15 minutes time frame, what do we see? Okay, we see a consolidation phase, very beautiful. And what do we want to be doing? So as soon as price came into our sell window, which we have identified here, we have witnessed consolidation phase, multiple rejection of the sell window at around the $18.25 area. And could this be a signal that price is going to be continuing to the downside? Well, the first thing we want to be doing when we sight reversal patterns like this is to identify the neckline, and we want to be using the neckline to guide our action during the New York session today. So we have a neckline here at the $18, let me see, $18.18, yeah, $18.18 area. Let me place that at the right hand side here. So we have, so a breakdown retest of this level should give us a confirmation to join the decline. So we already have a signal. We already have a signal right now, but we can't see the signal yet until this candle closes. So this candle is just 10 minutes, 20 cents, 20 minutes, sorry, 10 minutes, 16 seconds old right now. So what we want to do is to wait for this candle to close. Then we want to be looking at structures on lower time frame. You could scale down to a 15 minutes time frame, sorry, a 5 minutes, 1 minute time frame, 3 minutes time frame, whatever it is. We look out for retest after this candle closes right below this level to join the decline to the downside. So if you're joining the decline, where will our take profit target be? Well, if we look at the structure we have on the 1 hour time frame, we have to take this impulsive move into consideration. And if we take that into consideration, what we want to be doing is to extend this impulsive leg to the future. And the only way we can do that is to bring out our Fibonacci extension tool, run it through this impulse leg. And what do we have? We aim at somewhere around the 127 and the 1414 area as our take profit target zone, which falls at around the $17.60 area. So that's where our take profit target is going to be for any selling opportunity on the XCG USD. And one thing I want to share with you here for sake of being conscious is that as soon as price comes into somewhere around the $17.90 area, here we can see we had a buying potential around this point. We want to be locking our profit. We want to be moving our stop loss to break even or locking some profit at this point, because we never can tell how price is going to relate with this level during the New York session. So let's see how price plays around this area. And if we finally see, let me draw that out so that we can make it as a point of reference. So if we see price break down the structure during the New York session today, and a retest could give us further confirmation to join the decline into the take profit target zone identified around the $17.60 and the $17.50 area. So this is our scenario for the silver. Let's see how price action plays out, and I hope Ashitaka is in the house to witness this explanation. And I think this is going to be the last pair we are going to be taking today. I'm so sorry I will not be able to take the AUD USD. And before I call it a day, I think we'll have to take a quick recap of what our what we did so far today. Anything in the comment section? Okay, so let's Jack 1992, how are you? Good morning. Oh, it's afternoon here already. Jack 1992, all right. So let's quickly do a recap of what we discussed so far, then we can call it a day. So now let's move on to the US oil and what was our expectation on the US oil. We were expecting a bearish momentum, remember, And we begin to see a scenario where we took advantage of this move yesterday and we said, okay, fine, if we see, hold on a second, we took advantage of this move yesterday, breakdown, retest of structure, and the first thing I said is that we should move our stop loss to break even. Remember? So have you moved your stop loss to break even? Please do that. And then what we want to be doing now, especially for those who have missed this trade, is we look out for retest of this level we identified at $87.80 area, where we want to be taking advantage of a bearish continuation to the downside. And it appears price has rejected that area, and I'm very sure this has transposed into a reversal pattern on the 15 minutes time frame, on the 10 minutes time frame. So it's appropriate you could be joining this decline from this point, and let's see how price action plays out from that area. Now, moving on to the US tech, what did we talk about on the US tech? We talked about the selling momentum here, which we took advantage of yesterday. We took advantage of this move to the downside. We saw the breakdown, retest of structure, and we took advantage of this move to the downside here. And we cited two scenarios against the New York session today. The first scenario is if price comes back into the sell window somewhere around the $12,000.50 area and the $12,000.150 $12,150 area and the $12,080 area, we could be taking advantage of a selling momentum here. And I said if price choose not to come into that area and we see multiple rejection of this area at the $12,050 area during the New York session today, we want to be taking advantage of a trend continuation to the downside. So we have seen this, we see multiple rejection here. And then when we scale down to the 15 minutes time frame, what do we have? We identified the $12,036 area and we said we wait for signals in the form of a breakdown, retest of the structure to join the decline to the downside. So that is our scenario here on the US tech. Then we moved on to talk about the USD JPY, and on the USD JPY, what did we have? We said price has continued to the upside from here. Some will have taken their profits, and I said, okay, fine, if you had missed out on these opportunities that we saw here yesterday, then definitely you want to be patient enough to wait, and let's see if we are going to be having a retracement back into this bullish trend line, after which we look out for patterns to join the trend continuation to the upside. However, we let's see, in case we have a counter trend opportunity. How do we know we're having a counter trend opportunity? Well, if we see any scenario where we see multiple rejection of a level, we find lower highs here, price breaks down that structure, then we want to be looking forward to a retest to join the decline to the downside. That's a counter trend opportunity, which could probably fetch us about 200 pips if price moves in that direction. So I would advise that you be on standby to be able to take advantage of that potential opportunity. And if you are not a counter trend trader, then you wait for price to come back into this bullish trend line to join the rally to the upside. Then we went on to talk about the GBP card, where we were actually in a profitable scenario yesterday when price continued from this point to the upside, and we were stopped out, though we made about a 50 pips here, which wasn't that bad. And we saw the breakdown of the 1.51400 area, price continuing to the downside from there, and I said those who took advantage of that move, kudos to you. But if you had not taken advantage of this move, what we want to be waiting for is to see if price is going to reject this 1.51400 area one more time, and if that happens, that means market is giving us another opportunity to join the decline to the downside. Then we moved on to talk about the USD CHF, where we are still expecting that bearish momentum to happen after we saw multiple rejection of the structure that was broken yesterday. So this is the structure that was broken. We were able to identify this bullish trend line on the 1 hour time frame. Then we saw the breakdown of that structure yesterday, giving us a signal of a bearish momentum. Price came back to do a retest of the bullish trend line. In fact, we saw multiple rejection of that bullish trend line, giving us a clue into the strength of the sellers at this point in time. And one thing we also observe is that this rejection by the sellers is happening within a very strong sell zone, very strong supply zone, which we identified in daily time frame, remember? And then I said it appears there is a strong tussle between the sellers and the buyers at this point. The only time I will be buying the USD CHF if I see an outright breakout of the supply zone here, price breaks above this bullish trend line, taking out all the selling position at this point, then I will be seeing this as a signal. But remember, we are not getting too excited at the sight of a signal. We want to wait for price to give us further confirmation in the form of a retest of either the bullish trend line here, or price will come as far as the 0.98350 area, where we look out for patterns in lower time frame to join the rally to the upside. For selling opportunities here on the USD CHF, I have identified right below the 0.98350 area as an area we want to be looking to take advantage of a selling opportunity here. Now, if we look at the structure we have here in the last 24 hours, we can see how price has rejected, hold on a second, rejected the 0.98700 area and this area. So it's a risk worth taking anyways. We see multiple rejections here. You can actually join here. If you join here, that means you have a stop loss somewhere around, hold on a second, let me draw that out. If you join around here, you have a stop loss of around how many of like 25 pips. As a stop of like 25 pips, then you could join. Then if we see a breakdown of the 0.98350 retest of that level, you could add more position to your existing trade. So we have something like this. You add more position to your existing trade on this one. And the reason why I said we could take advantage of a selling momentum here is, one, we are within a very strong supply zone which we identified on the daily time frame. Remember, let me show you this supply zone here. This is the daily time frame. We saw a very strong supply zone here. We saw rejection of this place. Now prices within that supply zone here. That's the first reason why I'm saying that, okay, fine, it's appropriate. We could be selling at that point with a stop loss of about 30 to 35 pips to catch. Then the second reason is simply because price is below the bullish trend line. That is the second one. And then the third one is the multiple rejection that we can see, which is evident with this wicks that we can see here in the last 24 hours. So selling here is good. If we see a breakdown of the 0.98350 retest of that level, you could add more position to your existing trade. Then we moved on to talk about the silver. Is it? Yes, the silver. I think that's where we closed the day with. So we talked about the silver, and we said we identified a sell window here where we want to be taking advantage of a sell continuation to the downside. And also we said, okay, fine, that we have that sell window identified. We have already seen multiple rejection of that sell window around this area. We saw the sharp rejection here. We saw another sharp rejection at this point, and the old structure around this area is evolving into something that looks like a reversal pattern. When we scale down to the 15 minutes time frame, this is what we saw here. And when we cited that reversal pattern on the 15 minutes time frame, the next thing we did was to identify a neckline of that structure at around the $18.18 area. So what we said is we want to be patient enough to wait for candle to break below this $18 area to give us a signal that price is actually going bearish. Then we want to see price close right below this level. So we are yet to see price close right below this $18.18 level yet. If price close down below this $18 level, then a retest of structure on our lower time frame should give us further confirmation to join the decline to the downside. Our take profit target still remains around the $17.60 and the $17.50 area, which we identify here. But there is a caveat which I shared with you earlier, and the caveat is around the $17.90 area, which has a bullish potential here. So what I said is, as soon as price gets into this area, we want to lock in some profit or move our stop loss to break even to see how price action will play out at this point. So if price further breaks down this level, then a retest of that structure could welcome another position to add more to our existing trade. So this is the scenario we are looking forward to on the silver, and I hope you will be on standby to take advantage of these moves when they finally happen. So at this point, I'll be calling it a day. We were able to take about 7 pairs today, and that's quite a lot of opportunities to look out for during the New York session today. Remember what I used to say: Do not get too excited at the sight of a signal when it happens. You could see an engulfing candle taking you breaking right through your structure. Remember, you want to wait for confirmations to happen, which is likely going to come in the form of a retest of the structure that was broken before you now look out for patterns on lower time frame to join whatever direction price is giving you a signal of. And if price does not come back to do a retest of structure, just pass the trade. It's okay, you can pass the trade. There are tons of opportunities in the financial market to take advantage of. So on this note, I want to wish you best of luck during the New York session. I appreciate every single moment with you guys, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. And tell your friends and families, colleagues, to download the Xtreme Speed Live app so that they can be part of this family as we come again tomorrow to get prepared for the New York session. So on this note, I wish you best of luck and do have a wonderful day. Bye bye.